If you're a prospective renter and you're looking at, hey, should I buy a three-bedroom house or rent one? And you say, okay, well, it's going to cost me 150,000 down, then it's going to cost me $3,500 a month to pay the mortgage, plus I got to pay maintenance. Versus if I could rent a build to rent community home that's the same size, the maintenance is taken care of, zero down payment, and you're $1,000 a month cheaper. And then you can take that money that you were gonna spend on a down payment and invest it into an income property or a multifamily project or a BTR community for that matter. And some of those dollars that are coming off of that investment are paying your rent. It really starts to make a lot of sense. Hello and welcome to Profit and Property. I'm your host, Austin Mascet, founder and chief investment officer at Riverly Capital. Prior to founding Riverly, I spent 10 years helping the ultra wealthy build their real estate empires as an acquisition director and portfolio manager. Our guest today is Carter Buck, a partner at Loneree Communities. Thanks for joining us, Carter.
Yeah, thanks for having me on, Austin. Appreciate it.
Absolutely. Maybe you could tell us a little bit about Lone Tree Communities and your background.
Yeah, that sounds great. Well, as you mentioned, I'm a partner at Lone Tree Companies, and I serve as the CEO of Lone Tree Communities. So, as it would
Mm.
suggest, we're a full stack development and investment firm where we actually go on ground up projects. So, we're looking at new construction on all of the projects and investments that we do. I've been the CEO for a little over a year, although my background stretches into the last few decades. Worked for a number of different public home builders. Um, on the strategic side of things, where the development and the planning side. So I've got a bench there. That's kind of been the root of my experience. Although the last decade or so, I've been the CEO of a marketing firm. So I took a little bit of a detour, and a couple of years ago, jumped back into the space with a partner, and we've been running these projects ever since. So anyway, that's my experience.
That's amazing. And you guys have brought quite a bit of real estate out of the ground, developed it ground up, correct?
Yeah, that's right. So we have about 1,500 acres right now in our pipeline of stuff that's in the either in the development phase or in the entitlement phase. And so that gives us about 5,000 building lots now, but we'll probably bring on about that much in 2025. So we're pretty bullish on what's happening, and but we do control a lot of land, and that's across the country is our footprint. But we're sitting on a lot of land right now. Just excited about the opportunities in front of us.
So you guys are building primarily build to rent communities, correct?
So build to rent is a big component of what we do. Now, having said that, we kind of view it as like the tip of the spear for what it is that we offer. Like when we describe ourselves as developers of master plan communities um, that create a pathway for affordable home ownership. But we start with rent, and so for us, we actually follow the premise that home ownership, when you are getting on home ownership, is less of a product and it's more of a pathway. And so we will go and buy 100 to 200 acres of land in a great market, and we will put in not only multifamily but build to rent, and then we do some for sale product as well. And so generally we're between 400 to 600 units in our master plans. And BTR is actually the thing that kicks us off. The build to rent product is the primary thing. Again, we call it the tip of the spear because that's the entry point for most homeowners. And so we create those opportunities, those pathways to home ownership, but starting with the build to rent piece of what we do. So really what that means, that was a long way to say that BTR is a big component of what we do. Currently, we have 2 active BTR projects. We will start 3 more by the end of the year. And we have 3 more slated for next year, all of which are BTR. Right now we're sitting on about 1,000 units of our 5,000 units in our pipeline that are all designated for BTR. So a fifth of what we will produce.
That's amazing. So for the listener, tell us, what is a build to rent community, like from the ground up?
Yeah, there's a lot of buzz around it, obviously, and so it's kind of the sleeper asset class for folks that are investing in real estate. So at its core, a build to rent community is exactly what it states. You know, it's residential development designed specifically for rental and not for sale. And so, really, what that means is that you have long term renters, long term leases, and you manage it as an asset class, as a rental asset class. And so, much like multifamily, which is really considered apartments, things like that. It's managed similarly, but the product itself is single family detached a lot of times, or it can be townhomes or duplexes. But really, it's not really considered the apartment asset class. It's really what you would consider a traditional community, all of which is managed by a single entity. So, so yeah, build to rent communities are kind of exactly what they sound like. You build an entire community from the ground up, and you lease it out, and you manage it much like you would an apartment complex.
So instead of, a 13-story apartment building, you're building a 150-acre community with, let's say, 300 homes or 150 homes or whatever it is, and then they're all just for rent and never go for sale unless you're buying the whole community, basically, right?
Yeah, yeah, that's it. Ours are generally our build to rent component of what we do is generally about 15 acres. 15 to 20 acres is what we'll shoot for in a build to rent in terms of its size. But it's exactly it.
Mm.
It's a neighborhood that has amenities, that has a huge draw for people to want to live there. Um, and it's just rental. To your point, you never sell it unless you decide as an investment group that you want to exit it. Then you'd sell it all as one asset. But yeah, and maybe even mention. I'm sure we'll get into this, but one of the benefits of it on the investment standpoint is you can exit a little differently because they are single family fee simple lots, so you can actually sell them individually if you chose to do that as an option to exit. But anyway,
Yeah, that makes sense. Yeah. So what's all the buzz about these types of asset classes? Why is there so much demand?
yeah. So really, it really starts in the origins of the housing crisis. That's really what put us into this deficit of homes. We're underbuilt. Basically, coming out of the crash of 2008, everybody got scared. I was in public home building at that time. We were laying people off. Everybody's pulling back, and we went. So I worked in the Las Vegas division, and we went from our division doing about 5,000 to 6,000 homes a year down to doing 100 to 200. So you can imagine what that does to, the organization of the public home builder. And so everybody got scared. And so they started to underbuild. And we underbuilt for about a decade, for about 12 years. Everybody was very soft. And then COVID hit. And then the market kind of went nuts again and we all got flat footed. So all this to say, we're underbuilt by about 6 million units is kind of the current estimate. And so in
Wow.
order for us to get out there and meet that demand, it all has to be built and it just takes time. So, I say that because build to rent really came about because of the unaffordability of single family detached, the traditional single family detached you'd want to go out and buy, but still wanting the lifestyle. And so, because the market is what it is, we know affordability is what it is. There's lots of people who are interested in renting, and I think the reason why it's buzzy right now in the investment community is just because of the stability of a product and an asset class like this. The underpinning of it is that real estate is very valuable, and single family detached homes are very valuable, and they're holding their value and will for a long time until the market's saturated, and then it might soften a little bit. But for the foreseeable future, call it 10, 20 years, these homes, these single family detached, will more or less hold their value. So it can become a very safe and stable place to be in the real estate market. And I think that's why there's a lot of buzz around them. Is that it's an asset class that generally has, if you're comparing it to like a multifamily, and 150 unit BTR community versus 150 unit multifamily community, there's huge advantages to to your customer base that make it more stable. And I think that's why it's desirable, and why investors are kind of jumping into this. And it affects things like occupancy, your vacancy rates. You know, when you're in, a BTR community that has the amenities you want, the lifestyle that you want, you have a yard, you have a garage that's attached. Generally, those are going to be longer term renters. And so, in the apartment space, it's about an annual cycle. That's pretty typical for people to stay just 1 year. And so, just
Hmm.
the amount of churn that happens, and the turnaround on each of those, all that makes it a very stable asset class. And so, I think there's a lot of buzz around this just because there's so much. There's, it's a product that is going to hold its value, and it's a product where there's a ton of missing. There's just a ton of missing housing, and so for a long time, it's just going to be a safe place to be in the real estate market.
Yeah, that makes a lot of sense. And so, what like occupancy, long-term occupancy rates are you seeing as compared to, a similar multifamily property in a similar market?
Yeah, that's a great question, and because it's a relatively new asset class, I don't know that there's great national numbers on this, but like the ones that we're managing now, our existing product, where our existing communities where we've got renters in, it's easily a 2 to 3 renewal on their lease, and so basically what that means is that if you're in for 2 to 3 years in the same space, versus like a 1 year, that you would find in a multifamily project, or in an apartment complex. You're increasing that occupancy by threefold, really, in terms of its percentage, and the cost to operate that asset is just going to go down. I mean, the costs themselves can be a little bit higher because it's a bigger asset, it's a house. There's just a little bit more to that. But having said that, there's way fewer common area components, so it makes it a little bit stable, even though the cost might be a little bit higher. You're turning those costs less frequently, and
Hmm.
and they're just more stable. You're not going to have a big elevator that's going to break down on you, and you got to run that in terms of maintenance. So anyway, that's yeah. So I think that for us, we see 2 to 3 years is very it's very reasonable in our communities in terms of how long people are staying
Yeah.
and renting.
And that's virtually unheard of in the multifamily space, right? So your turn costs, every time you turn a unit, that's gonna cost you no less than $1,000, if not, it can be up to 5 or $10,000, and if that tenant decides to stay for 3 years, that eliminates that cost.
Yep.
Plus, there's 0 downtime during that time, right?
Yeah,
So,
absolutely. Yep, yep. So I mean, huge benefit, right? If this is your asset
yeah.
and your investment, like huge benefit because you're reducing that operating cost and that turnaround cost pretty substantially.
Mhm. And so tell me about like the demand for that type of unit, right? Versus, you're talking about say a three-bedroom house with a garage and a yard versus maybe a townhome or even an apartment unit. Why should someone rent that rather than buy their own home, even if they can afford it? Because it sounds like a lot of your tenants are, up to millionaire tenants, right?
Mhm.
Um, and they're still deciding to rent rather than buy. So why do you think that is?
Yeah, so that's a phenomenon that we're seeing kind of emerge. I think in a related way, it has to do with the affordability. But really, there's two people that rent: those that have to rent because they don't have an option to buy, and those that choose to rent. And there's lots of great reasons out there that you would. You know, our tenants, for example, we have one that I can think of in one of our communities is a doctor and anesthesiologist. And so, for him, renting is just a way for him to stay flexible because his job actually takes him from market to market, within 1 to 2 years. And so, for him, it's easier to just come and rent, and there's a lot of value, and really for what he does with his income as he invests it makes it a better opportunity for him down the line to maybe retire because he takes what would be considered going in and buying a home, you know, taking all of those costs and actually investing them in other areas. And so for him, it makes a lot of sense to do that. And so, yeah, so I think what we're seeing is that people choose to live in these communities because they're more amenitized than even the other houses that they might be able to afford if they can afford. Clubhouses, pools, walking trails. Maintenance is, that's all covered within the cost, and so it's a maintenance free opportunity for them. So there's a lot of really great reasons to go in and rent versus to go in and buy. Now, as far as it goes to like the product, you had asked about townhomes versus, 3 bedrooms, 2 bath. So we have a little bit of everything that we have out there in our BTR communities. But here's one thing that's kind of surprising and a little counterintuitive. So one project we have specifically is located in the Tri-Cities area of Washington in Kennewick. That's a 166 unit BTR community that's placed in really what is a premier area of that market. And so as you leave the community or as you're driving into the community, you're seeing a lot of these really beautiful homes. So it's a highly desirable market for somebody to live in next to great schools, hospitals, shopping, it's kind of the up and coming area. And so what we found is that all of our segments actually work well because the location is great. That you have people jumping into a 3 bedroom, 2 bath, 2 story, about a 1,700 square foot, very traditional home, like, leases out really well, right next to a townhome unit that is also 3 bedroom, 2 bath. But the one that surprised us the most was a 2 bedroom, 1 bath, 880 square foot single family detached home without a garage. And so by far our best, our best mover by a long shot. And so, I
Mm.
think what we've learned about that is that you have people that want the stability, the area, the setup of a single family detached that otherwise wouldn't be able to, but the low maintenance. And so, I mean, it's a little bit of everything. And but I think what we can learn from that is that in some ways, people's tastes are actually changing for what housing really means to them. A
Mm.
generation ago it was about a big yard, a big house, regardless of how many people are going to live in there. And I think now people are viewing housing just a little bit differently. They want the area, the location. They want a single family detached in a lot of cases. But I don't know, 10 years ago, I don't know that it would have been a very, desirable product to have such a small square foot house. And we're seeing a bunch of different segments attracted to that. We're seeing, the first time, movers, you're moving out of an apartment. This is your first home. That's not an apartment complex. And then we're also seeing people who are downsizing. So, empty nesters, people who are in retirement that are looking for, a smaller footprint, a smaller place to be in and to manage. So anyway, product is interesting. That was a long way to answer your question. I apologize for the length, but product is an interesting thing right now of what we're seeing in the BTR space.
Yeah, that's very interesting. So, if you're a prospective renter and you're looking at, hey, should I buy a 3 bedroom house or rent one? And you say, okay, well, it's going to cost me 150,000 down. Then it's going to cost me $3,500 a month to pay the mortgage. Plus, I got to pay maintenance. Versus if I could rent a build to rent community home that's the same size. The maintenance is taken care of, zero down payment, and you're $1,000 a month cheaper. And then you can take that money that you were gonna spend on a down payment and invest it into an income property or a multifamily project or a BTR community for that matter. And some of those dollars that are coming off of that investment are paying your rent. It really starts to make a lot of sense, from that perspective. Or if you're a empty nester and you're coming down, like you said, coming down in size, and you just want to not deal with maintenance, and so you sold your old home that you were living in, or you rent that out, and then that pays for your rental at your community. It makes a lot of sense for a lot of people, I think.
Yeah, no, I think you hit it right on the head. And I think that's more and more, the rising generation, millennials, Gen Zs. I think that their opportunities for investment is going to be outside of just their home. Whereas the majority of people a generation ago, their wealth was built on the home that they bought and the equity that they were able to create within that home over time. And I just think that, there are better ways and faster ways for people to actually build wealth than just put it in their home. So a build to rent community gives them all the amenities to be able to do that with the flexibility to be able to, move when they want, as well as invest what they would have invested, put into a home. They were able to invest it in ways that are actually, frankly, going to just grow faster from an investment standpoint than just in your home.
Right. There's so many case studies out there of, okay, so let's say you bought a home in 1985 in Los Angeles, and then you look at that investment versus the S&P 500 over the same period, and even then, the S&P 500 wins, even though the growth of that asset has just been insane.
Yep.
So has, some other assets have done a lot better. That's
Mm-hmm.
pretty interesting.
Yeah.
Um, so how do you guys, look for a market to go after for build to rent? You said you had, was it 5,000 acres or 1,500 acres that you have sort of in the pipeline?
Mm-hmm.
How do you choose where to buy?
Yeah, great point. So there's a lot of different areas that you can look at when you're talking about which markets are hot, and there are certain markets in the country that are just hot right now for BTR and for a lot of different reasons. So that would be like Sunbelt areas where you have Texas, Florida, some of those areas where it's warm, and you really have strong job growth, things like that. The other areas that you're going to find pockets of this that at least within the last 5 years have been strong is going to be the secondary markets. You have some of these smaller markets like Raleigh, Nashville, San Antonio, places like this where they're adjacent to big markets and they're just really secondary markets, but have everything that you need. Uh, you know, as people push out of the major metros. And then maybe the third area I'd mention is that it's just the suburban areas to the major metros. And so back to your question of where do we look for and how do we find that land? So our strategy is around both the secondary markets and the suburban markets. So we'll take a look nationwide, and we've got a pretty comprehensive process in finding the land. And that's actually kind of our secret sauce, is how we run our models that are going to tell us which markets are going to be the right markets for an asset class like this. So some of our areas where we're doing this are going to be Lexington, Kentucky. As I mentioned, the Tri-Cities area as well.
Hmm.
Norwalk,
Hmm.
Iowa, which is just right in the metro of Des Moines. Elizabethtown, Kentucky. So when you look at those on a map, you can see that they're in secondary markets. Some of them are in secondary markets, some of them are suburban markets. But what we're finding is that when you get into the right market where you have strong inherent job growth, where you have a shortage, strong rents because there's a shortage of rental product that's out there, where there's a shortage of affordable housing is another key indicator that we look for as well. And then a lot of times we will see if there's something, within the market's going to be that's going to drive unusual growth as well. And so in some of these areas where you hear of the big manufacturing plant that's coming in to some of these secondary markets, and they're just short on housing. And so, there's a lot of key factors that we look at, but they're all the fundamentals of good real estate investing. Location is everything. Now, for us, as you go and you buy 100 acres or 200 acres out in a submarket, you want to make sure that your bet is right. So what's been cool for us is that as we have entered into these and have these projects, we've actually had some public home builders come to us looking to see if we would sell either all or a portion of our project to them. So for us, it's been great. It's been a validating process to know that we're in some of the markets that even some of the other big players are. Having said that, we've got we look for markets just that have an inherent job growth, in migration, all of the desirable areas, and there's so many of those great areas in the country right now, outside of what have been boom towns really for a long time. And so BTR thrives in almost every segment, actually, where there is a strong housing market or a strong rental market or a shortage is really what's creating the strength. BTR is right in there as a subset of that.
Oh, that's great. And I'm glad you brought that up because that actually brings me to one of the things I want to talk about is our our investor guide. Loneree Communities and Riverly Capital have actually come together to put together this free investor guide that's available. If you click the link in our description, where it'll talk about the 5 major things you need to know before you invest a single dollar in a build to rent community. And some of the great things that are in that guide, Carter, is what you talked about how what data you need to break down and what data you need to research before you pick a community to invest in, and what markets you're looking at, as well as how to find the right operator to invest with, and making sure that the community is actually going to get out of the ground and be developed, all those things, and what returns are realistic and which returns are pie in the sky, completely unrealistic. So if you're thinking about investing in a build to rent, definitely click the link in the description and take a look at that guide, because I think it'll help a lot of our listeners.
Very cool.
So moving on. So what should a an investor look for in an operator? Why are you guys so good at what you do? And maybe you could give some color on that.
Yeah. No, this is probably the single most important thing you can do in any real estate investment, whether it's a BTR community or a multifamily or any other real estate asset, is going to come down to the team that's actually going to be pulling these off. So I would say that there's 5 things. I feel like we excel at these at what you should be looking for, and maybe we'll even just group them down into 4. But the first one you're going to want to see is just track record. Have they pulled off a community like this in the past? Have they gone through the work of acquiring the land, entitling the land, working with the engineers, getting the community design, getting the product picked, getting the general contractors picked? So there's a lot of experience that we have bringing to bear on this. Decades and decades of experience. Not only myself, but the partners within Loneree Companies. Over 30 years of investment, or excuse me, of development experience. Throughout the country, and even in some North and South American countries. And so, anyway, track record is going to be a big one. Have they done this before, and what can they point to? And with that, I would even just say, as you're talking to people, ask them about what their failures were too, things that they didn't expect, and how did they overcome it. And so, a good operator is going to have had that experience. Everybody's going to point to their bad days. Everybody's going to point to the things that they've had to work through that have been hard. So those that have done it, ask them about it, and they'll be able to tell you. So track record's a big one. The other one to look for is just vertical integration. There's a ton of synergy. So here at Loneree Companies, not only do we do all of the land acquisition and entitlement, but we do all of the development as well as the property management as well. So we're fully integrated in each aspect of managing one of these communities, one of these assets. And so the value to that is that really what we're able to do is streamline our processes and actually come in less from an operating expense standpoint. Because we move on volume and we have a dedicated pipeline. And so, anyway, having that vertical integration and having all the facets to make sure you can control the success at every stage of the development is really, really big. So vertical integration, you want all of those things. You want your operator capable of navigating all of the pitfalls from each one of those stages. So maybe another one to mention is going to be transparency. That's really big. So for us, when we manage one of these communities and when we're working with a group of investors, having access to exactly what's happening in real time is super important, and transparent on all the updates. You're going to want an operator who's going to give you regular updates to know the good and the bad of what's happening. And maybe I would even prepare anybody who's thinking of investing in one of these. None of them ever go completely flawless. Development is a unique, real estate development is a unique and dynamic proposition. And so, you really have to, sometimes you just don't know what you don't know of a project, and you won't know until you get in and start managing through some of the pitfalls. So a good operator is going to be very transparent with what they're seeing, the good and the bad. And so maybe even the last one that I've mentioned, the fourth one's going to be operational efficiency. When you have somebody who has proven systems, managing the maintenance, the tenant turnover, the cost control, that's certainly as it's stabilizing. But even the operational efficiency, changing hands from acquired land to designed land to building on the land and then turning that over unit by unit to the property management company. So you just want those efficiencies in there. One of the things that can kill a project like this is death by a thousand paper cuts. And so if you have, a lot of small inefficiencies, it just eats away at your margin. So if you can get really, really good and aggregate your marginal gains, then you are going to come out way better from an overall return as an investor. And so making sure that somebody you're working with and who's operating has those operational efficiencies down is sometimes the thing that actually makes or breaks the community overall. So yeah, so you're going to want to look, just to recap those: track record, vertically integrated, being transparent with what's happening on the project, and then somebody who's been around long enough to really iron out the operational efficiencies. I think that's what makes a good operator. And I think that's what people should look for when investing.
Yeah, absolutely. Yeah, I've heard of development as uh, a way of stepping around landmines, right? Just trying not to get blown up. That's seems to be the common thread.
Yep, yep, absolutely.
Well, great. I think it's been extremely helpful and educational for me, certainly understanding a little bit more about build to rent and why it's really coming to a head here. Um, you know, as far as risk factors uh, for you guys and for investors, what do you guys look for? Obviously, markets are a big piece, but what else can you kind of cover?
Yeah, so risk factors are really, really important to get to understand and know as a potential investor. So here are some of the more common ones that you're going to encounter. First one's just going to be market risk. So real estate is always driven by the market. Now, fortunately for us, we have a huge tailwind because we are so underbuilt. Having said that, market risk includes a lot of things that would be, drive costs and other things. So market risk is always present in any real estate development. So understanding how within a local market, even though we're undersupplied nationally, making sure you're not in a market that's oversupplied, locally. And so market risk is a big one. Next one to look for, really, there's always risk in the construction, with delays and with costs. And so being able to manage through that, think about, we're hearing a lot about tariffs. We're hearing a lot about immigration, where a lot of the labor for construction comes for folks that are immigrating into the United States. And so these things present themselves as risks in the building process that you just have to be aware of. So another one that's probably on everybody's mind is just interest rate risk. So when you're doing a project like this, the real interest rate risk comes into how it's financed. And so projects that have a lot of, financing or debt that they take on to acquire the land and to develop the land, where you have interest that's a big factor into your pro forma, a fluctuation in interest rates can impact the pro forma, and in some cases pretty substantially. And so anyway, interest rates are one to look at. There's the management risk, as we talked about. You want an operator who knows what they're doing, who knows how to manage the leasing process, the maintenance, the tenant relations, all of that really gets grouped under management risk. And then maybe the last one, because it's an asset class, is how you want to exit this investment. And so when you exit a BTR community, there's a couple of different ways you can do it. And the primary way, and the one that makes the most sense, and most operators do this, is to sell it as a complete asset, as you mentioned. So when you do that, that's typically tied to what's known as a cap rate. And that cap rate can fluctuate based on it like any other market rate, based on what's, the supply and demand within a given market. And so, as you are, pulling together the pro forma for a project like this, an element of risk is understanding is your exit going to meet and you know meet the terms of what you have calculated or that you've planned for in your pro forma. And so, in some cases, if the cap rate's higher than you'd expected, then maybe it's a hold for a little bit longer. If it comes in right where you want it and where you planned for it, and you can exit, then that's great. But there is some risk to that exit component. And maybe if I could just add on this one piece when you're talking about exit, being able to exit out of a BTR community, that exit risk, one way to mitigate that is because you actually have the option, if you had to sell these as individual properties, whereas you can't do that
Mm,
in a multifamily project. An apartment complex can't be done that way. And so, the thing I love about BTR in terms of managing its risk is that if you had to, you could sell the individual units, and in an undersupplied market, you could do quite well as an additional way to exit an asset like this.
mhm. Yeah, I mean, that makes a lot of sense. If you're just a regular home builder and you're buying, you're building to sell, you're kind of losing out on all that rental income potential that the community had as a BTR.
Mhm.
And then, but if you do rent it out, then 5, 10 years down the line, you can always sell it, as a single family home, and there's everyone always wants to own those. So.
Yep.
Um, well, great, Carter. It's been an absolute pleasure. Thank you so much for coming on, and definitely, if you're new here, take a look at that investor guide that we put the link in the description for. Um, you know, the 5 things you really absolutely have to know to get into BTR to build to rent. It'll dial down how you find a market, how you pick your operator, um, how to make sure that the community has the right unit mix for the type of market that you're in. All these things are must to know when you're looking at investing in build to rent. So take a look at that. Click the link in the description. And otherwise, Carter, like I said, my pleasure. Love to have you on again, and I think we'll end it there.
Awesome. Thanks, Austin. Appreciate the opportunity to come and visit.